who's joining us live. Uh, and plenty happening in global markets, right? Andrew, hi, good morning. There's plenty happening in global markets. Talk to us about what your sense is. India reaching a possible trade deal with the US. Uh, how much will it, how much of a balanced deal do you expect this to be? That's point number one. And what could the impact of this be likely on Indian markets? Really, that's the big question.
Three things here. First, nothing that Trump ever negotiates is balanced, lasts for more than about 5 minutes, and it is mostly blah blah and hot air till you actually sit on the table. Remember, as far as we're concerned, India is facing a 50% increase in tariffs overall, the extra 25 coming because of its trade with Russian oil. And although Trump claims that India is trading much less Russian oil than before, I haven't heard anything from India saying that this is the case. So I think it is totally premature to think that just because Trump said that it's going to be a very good deal for everybody, that's going to be a good deal for India. Number two, India's GDP is not NOT, it is not dependent on exports. And exports to United States is a very small percentage of overall Indians' exports in total, and therefore as part of GDP in particular. So I much prefer to look at what's happening to inflation in India rather than whether a trade deal with Trump is going to be there, is going to last, and is going to have any particularly strong impact. So I'm afraid I look at it with a benign indifference.
The shutdown, Andrew, the possibility that that will be lifted, the US government shutdown, and US markets have seen a rally, and I know that you aren't particularly in favor of US equities at this point, but the fact that the shutdown is coming off, is likely to come off, let me put it that way, and you also have rate cuts possible going forward as well. What's the sense like on those two pieces moving US equities?
There are several mixed things here. First, there is no guarantee that we're going to have any rate cuts until and when we have 2 months worth of economic data and numbers, particularly labor market, particularly inflation. Also, Trump claims that inflation has been coming down continuously. Inflation has been going up in the last 6 months. It has been going up, both CPI, core CPI, and PCE. I really don't know where the man got his numbers. At least I get mine from Bloomberg. So cuts in interest rates, there is absolutely no guarantee until we have numbers. And we won't have numbers till the relevant sectors of the government that produce those open up. And there is absolutely no guarantee that this is going to happen. On the contrary, there is great significant doubts whether the deal that has been stricken is going to pass from the Senate to the House of Representatives. There are two separate hurdles to do that. I'm not saying that this is not going to happen, but to jump that everything is fine, everything is not fine as it is. Okay, so the reason why I keep staying out of American equities, also it's very simple. Look, S&P year to date is 16%. If I was to put half my money on Hong Kong year to date, it would have been 32%. So it's insane. People are obsessed investing in the States where they can get much higher returns. For example, the Euro stock, the FTSE, the Nikkei, the Hansen Index, the CIC, the Shanghai, all of them are in their 20s and over, as opposed to the S&P, which is at 16. So, you know, if I was to turn to my clients and tell them, we would have been making a lot more money if we hadn't stuck on American shares, of course, they're going to kill me. Okay, and given also that the increases in the S&P are driven totally by a very small number, I understand something like 8 shares are driving something like 40% of the increase. This is completely insane. That's the reason why I'm so careful about the United States shares. Not that I don't like the States.
Okay, Andrew, appreciate that view coming in, and yes, all eyes are going to be on how constructive the US market looks going ahead now that